Nuckman, Chief Market Strategist at bullseyeoption.com. Alan, are you a big Russell guy, or are you a small cap trader now?
I am a bull market everything guy, okay? And so you've got to embrace the bull boom. And that's what this is. And for me, a lot of times as a trader, you want to evaluate how the markets act, but more importantly, how they react. So Thursday and Friday were huge for the markets. You saw some major profit taking after big moves in a lot of those stocks, and a lot of profits built up. And guess what? People bounced it right back. But to get to the Russell again is just another indicator. The Russell has no stocks that are really tradable. It's the market cap of the whole Russell is equivalent to Microsoft. So you can use it as a barometer, and it's the last of the 4 indexes to play ball. So it finally broke out of a sideways range that we've seen this exact same thing in the S&P, the NASDAQ, and the Dow, and now the Russell wants to play.
Okay, and do we play back, or what do we do, Alan? Do we shift? Do we rotate? Do we go hard pivot? What do we do? Do we dip the toe? You know, because last week we had 2 versions of it. Thursday was like hard pivot, tech all down. That's kind of a little freaky. But then Friday and today are looking like, you know, it's miraculous.
Again,
everything
I know.
works.
You and Kevin are hurting my head with your thinking. You are thinking so hard that I can hear it coming out of your ears. Trade what you see.
That's what we do. So we think and we talk, Alan.
Yo, you've got to trade what you see. We are in an everything bull market. It's all about risk reward now, okay? Yeah, we've had these high tech companies lead the market, but the rest of the market's playing catch up, and it's done so. First tech led, then the S&P followed, then you saw the Dow follow. So it's a progression. Everything is following suit. We are in an everything bull market. We're getting 2 rate cuts this year. It looks like pretty much a done deal. So everything is positive for the bulls. Unless you know something the market doesn't know, you know, we're on a path to get to S&P 6,000 like I talked about months and months and months ago.
All right. Okay, so, and that's true. That's been your baseline, right? The extension to the highs. So what's your timeline for 6K, Alan?
Well, I'm not a market, well, I am a market timer, but that's my long-term objective. So I'm going to take advantage of risk reward and a lot of opportunities wherever they may come in the meantime. But that 6,000 is not like a projection. It's simply taking the distance of that drop that we had in 2022, adding it on the old top. That's all it is. And that's happened every single time in market history that the market's made new highs, the distance of that drop. That's a full V recovery. And then we'll see what we can, you know, calculate from there. But that's the first goal. Okay.
All right. But again, this is where we always have fun, and I like to tease you because it's like gung-ho, buy everything, stocks, rock and roll, S&P 6,000, and then what are we trading? Petro. So like, all right, so the random stock of the day. Well, what's up? This is just one you think's going to catch up?
Okay. The big story that you guys neglected from last week, not that we didn't have plenty of big stories, but the big story is the dollar. The dollar's at 5-week lows.
What are you talking about? We're talking about the dollar. You know what you're talking about. I'm talking about the dollar all week.
The dollar needs the lead. The dollar needs the lead. Okay, that's the big story.
That was the big story last week. Yeah. All right, go ahead. Go ahead.
And it should be this week as well because that's the final catalyst.
It's just done.
That's the final catalyst. Rates are down. They're going down. We're getting cuts, and the dollar's going down. That's why the Russell caught on fire. The Russell was up 6% last week. Why? Because of the dollar. Okay, so dollar down means assets up. Where's the risk reward? Risk reward is in energy. Energy still has a PE of around 8 or 9. As a group, they still have a long ways just to get back to where they were in February and March. They're at about a 15% discount from where we were then. So, you know, there's a lot of value here at these levels. The stock I'm looking at, PBR, again, I've always liked energy and I've always liked Brazil. And you can see the PE on this stock is 4. 4. Let me tell you that. It's, again, 4. So this stock has been between 13 and 18 for the year. It's got leverage buying coming in, which is the money flow that I look for. It's got the bullish divergence where it made a new low but not new highs and implied volatility. So therefore, that's a sign of a sentiment shift in this stock, and you can't beat the risk reward on this play.
Okay. I love that. Not often you do find a single-digit PE like that. Okay.
That's not even single digits. That's almost 0. You understand?
Yeah.
But not zero in a bad way, like
Well,
zero in a
yeah,
good way.
right. No, that's a good point because sometimes
I think it's called an
zero in a bad way.
asymptote. Is that called an asymptote when it approaches that line?
It gets close but doesn't touch. Correct. Yeah.
Right,
See, there you're thinking, Alan.
So
See?
no, I'm not thinking. What I'm thinking is this. I have to think sometimes to have conversations with you. But so what I'm thinking is a January option, a January 13 call, trading for about 250. It's $2 in the money. So my expiration break even is 50 cents higher. It's been trading between 13 and 18 for the year, but overall for the last decade, it's been trading between 10 and 20. So we're at the $15 midpoint. That usually portends a move up to the range top at 20. So if we just get to 18, I'm not even asking to get to 20. If we just get to 18, this option gains 100%. But most importantly, I've got 6 months just in case there's any macro profit taking. And that can happen from time to time because people have so much built up profits in their trades.
All right. So the 13 strike, $2 in the money. You got until next year for it to pay off. Little energy trade.
Enjoy your summer.
A little international trade.
Summer stock melt up. That's right. What I got to say.
Petro summer stock for the melt up. All right. Hey, what about Tesla? You still like that?
I told you Tesla was going to bounce, and it had a big bounce. Now, how it follows through, it's not easy, obviously. So that's where money management and discipline comes in. You've got to learn to take profits. And the exact same pattern I mentioned, and I know we had a long talk about it, was Apple. And Apple's what? Making new all-time highs now? So Tesla had the exact same bottom pattern, that bullish divergence, that gap, filling the gap, the earnings disappointment. That was the last gasp. And guess what? Apple rock and rolled from there. Tesla could be very much the same thing because of the psychology of that stock. So yeah, I still think there's a lot more upside. Again, the risk reward may not be where it was $75 ago, but there's still more upside in a lot of these stocks.
All right. Thanks, Alan. Good chat. Fun one. As always, a pleasure. Alan Nuckman, Chief Market Strategist at bullseyeoption.com. All right. By the end of the money call.